Welcome everyone to today's Dynamic Trend Advanced Trading Platform class. This is our weekly webinar. My name is Stephen Brumbelow, and today our presentation is going to cover, we're going to do a little intro to the options volume map, go over some symbols that might be considered good setups. Also, we're going to take a look at the Elliott Wave turning points study. And again, go over some of those setups, how we can actually search for these things in the matrix scanner. And then today's topic, the main topic, we're going to continue our how-to features, and today we're going to cover the risk graph and we're going to cover the projection window. And they kind of work side by side, but I want to show you the difference between the two and what each one of them can do for you in your trading. So those are going to be our topics for today. As usual, if you guys have any questions, feel free to type them into the question area, and I will try to get those in real time. I don't always do that, but if I see any questions that I miss, I will definitely answer all those questions at the end. And if you have any questions outside of this presentation, feel free to send us an email at support@dynamictrend.com or sales@dynamictrend.com. So either one of those questions you can put to those email addresses. Got a question right off the bat. Fantastic. We'll take them. The question is can a list of stocks be imported into this software? I'll just answer this real quick for you. The answer is yes. There's two ways of doing it. You can either do it in the quote sheet, where you can create a brand new quote sheet and right click on the symbol cells and then go to import symbols. And here's where you can import a list. It could be comma delineated, it could be carriage return delineated, but a list of symbols, and that'll import it into the quote sheet. Or if you're inside of the matrix itself, if you want to scan for a specific list, we scan all of the optionable stocks in the matrix scanner. But if you want to scan for a specific type of symbols, you can always click the drop down next to additional filters. Click on the scan list, and then here you can import a list also from that location. And then once this scan list is imported with a bunch of symbols, when you click scan, it'll only use the symbols that are in that list that you imported. All right, well, let's go ahead and get started. I want to talk a little bit right off the bat here about the options volume map. I want to at least give you guys a view of this every week. So we have some new people that are coming in today, which is great, so I want to make sure that they're exposed to the option volume map, and then give you a couple of different examples. I have an earnings example and then a reversal example, not a continuation, but a reversal example. And so we'll take a look at both of those. So let's kind of talk a little bit about what the options volume map is. So the options volume map is a tool that we designed. It's a patent pending tool. It's very unique to the Dynamic Trend software. And what it allows you to do is to view an option chain on a chart. Okay, so that you can see different expirations and strikes in those expirations to determine where the volume is being centered, whether it be for the call side or the put side at each individual strike. And as you can see here, this is just on the left, this is the option, just a standard looking option chain, right? We have calls on the left, puts on the right, and these are the little strikes that we have in the middle for each one of the two expirations we have here. Well, here is our options volume map. And essentially what this does is each one of these, I don't know what you'd call them, tubes, are basically expiration months. Okay, now we support monthlies and weeklies, but these are the two expiration months. And what we've done is we've lined up all of the strikes. As you can see here, each one of the strikes lines up with the actual pricing on the chart itself. And on the left-hand side, we give you a blue color to give you an indication of the level of call volume at each strike. And on the right side is the level of put volume at each strike. At the bottom of this, we actually total that up. And let me zoom in here for you. I made my screen resolution a little higher for you, but hopefully you can see this better. At the bottom of this, we actually total the call volume and the put volume up. And then what we do is we just do some simple math here, no magic, and give you a ratio between the two so you can understand where the bias is and where the advantage is as far as the call or the put volume. And so in this example here, the total call volume is at 4,981. The put volume is at 781. So we have this imbalance of 6.4. And what we found out in our research is that anything greater than 1.6 gives us a what we like to call an imbalance. Okay, in this example would be a call imbalance, and so that can give you an indication on how you want to potentially take a trade. Okay, or when a move could be potentially identified at its very early stages, meaning a pivot high or a pivot low. So in this particular example here, and I'll zoom back in, with this call imbalance on this particular day, okay, there's a lot of call buying that's happening at certain strikes here. This gives us an indication that this could be a potential pivot low. And the way we qualify that is if the high, for some reason I lost my laser pointer, the high of that bar, right, is the confirmation. If the next day comes in or the next bar comes in and gives us a breakout with that imbalance, that gives us that extra confirmation that that's the direction, and now we're probably looking at a pivot low at that particular moment. And so, and as you can see in this example, it broke out of that particular high. We still had that call imbalance, and it continued to run higher. Now, one of the nice things about this is that we can use this particular tool before earnings release. You know, for earnings, we like to do straddles and strangles, right? We're on both sides of the plate. But what if you saw an enormous amount of call or put imbalance greater than 1.6? That might be able to give you an indication that instead of kind of throwing a whole lot of risk out there and balancing yourself out and hoping to get a bigger breakout, what if you just focused on one side of that to maximize those profits, knowing that there's been a lot of call imbalance in, say, the lead up to that particular earnings? And so as you can see here, this particular earnings play popped out because the previous day's bar had a call imbalance. And so that gives us an indication there's a lot of pressure happening on one side of that. So we can use the options volume map for those types of things. So let's take a look at a couple of real-time examples, okay? And I will go ahead here and add the options volume map to our chart. If you want to learn more about some of our ways that we add stuff to our chart and all the charting tools, last week's presentation, we really covered that in detail, how to add studies, edit studies, those types of things, all kinds of stuff with charting. I definitely recommend viewing that archive. It's in the same web page that you signed up for this webinar. Just scroll down to the bottom and all of our archive webinars will be there. This particular webinar will be there up there tomorrow afternoon also if you want to view it one more time. So we're going to go ahead and put this on, okay? And I'm going to go to a ZBRA, okay? Now ZBRA was an earnings play, all right? And as you can see, ZBRA had earnings today, and I could turn on my earnings tool and let you know that when the actual earnings occurred. But if I click this blue button here, turn my crosshairs off. If I click this blue line, right, that's the option volume map line telling you that it's in real time. I can click on it and drag it back one day to get yesterday's information. Okay, so you can view this historically. But assuming this is yesterday, you would see that just visually we can look and see that there's a lot of blue action, right? There's a lot of call volume that's happening at these upper strike levels. We can also see down here, this particular box that you see below each one of the expirations is a 5-day historical total volume imbalance. So you can see that there was a lot of call imbalance on that particular day. So if you're assuming you don't see this bar here, right, when we go back in time, you could have, instead of saying, you know what, I'm thinking about straddling this, instead of that, you could have said, well, you know what, I think I'm going to put a little more pressure on the call side. Okay, might mitigate the risk a little bit with some puts, but for the most part, I'll put the heavy pressure on the call side because that seems to be where things are going. And as we can see, historically, that's exactly what happened. And even today, on this particular bar, when we had that gap up, even today, we still have a continuation of that pressure on the buy side in these upper strike levels here with an imbalance of 2.0. We're still above that 1.6 level. So a lot of people like to do earnings plays where they just get in, scrape what they can get out of it the next day or the first hour of the next day, and then get out. This might be an indication that, hey, as long as my imbalance is still on the side that I took, you can continue on with that particular trade. Let's take a look at LMT. I was just looking at that. That is another stock, and if I could actually type it in correctly, this is a stock which had a reversal, okay? If I go ahead and drag my options volume back to this day right here, this is the first day where the imbalance, and I can zoom in here a little bit more for you, after a downward cycle, right? After a downward cycle, this is the first day where you had an imbalance on the call side, okay? If we go back here, a previous bar, it's at 1.4. There's not a whole lot of action there. Previous day bar, it's at 1.8 on the put side, right? So this is a lot of downward pressure. Now all of a sudden we have this first bar that comes in where we're at a 2.5. We've rotated from the call or the put to slightly the call to above that 1.6. This could give us an indication on this day that we're looking at a potential pivot low move towards the upside. Now, remember, when we looked at that slide is that we need that confirmation, right? Now, you could potentially take this trade right now, but if you want to be more conservative, the actual way to handle this, and I'm just zooming in, excuse me, the way to handle this is the high of this bar. Once that's taken out, that confirms, as long as we still have call side imbalance, then that confirms that particular trade, and then obviously you can take that trade. And as you can see, going forward, it continued that way. And then you can keep managing that trade in that particular direction. So that's one of the ways we can use this. We can use this particular tool for continuation trades when you have pullbacks in the market. Remember, a continuation trade, market is impulsing, we get a slight retracement, profit-taking phase, right? Everyone that bought in down here or bought going up here decided to pull some of their position off or all their position off. The stock still might be strong, right? So once that sell-off is finished, it will continue to make newer highs. And we can help, that options volume map can help us identify those particular areas that when the sell-off finishes, right, when those puts are out of the market and the selling stops, then as soon as we get that call buying back into the market, the strength continues, we can then continue on with that. And the option volume map can help us with that. Now, another way to look for these particular candidates, for these pullbacks in the marketplace that we're talking about here, and of course, some of you might recognize this pullback that I'm drawing, this impulse wave with a pullback and a continuation as Elliott wave, right? Elliott wave, wave 3 is the impulse wave, wave 4 is the profit-taking phase, and then wave 5 is the continuation. Continues on with less strength, but again, creates higher highs. So we've created and developed, we've been doing Elliott wave since 1986, really, when Tom started computerizing Elliott wave. We've been doing a lot of research, and we've come up with a tool called the Elliott wave turning points, which allows us to identify pivot points in the marketplace. Now, our Elliott wave does not put counts on the chart. That's more pure Elliottitianness, I guess you could say, if that was even a word. But pure Elliotticians would put the counts on the chart, and every time a new bar comes in, they would count it. What we're trying to do is find opportunity. Okay, we're trying to really optimize this as much as possible. So not only are we using Elliott wave theory, but we're also utilizing other tools that we've built into the software with our research that will help identify tradable pivot points in the marketplace. And so let me go to IBM here. That's the base one, the base symbol. Anytime you open a chart, it always defaults to IBM. You can change that, by the way. I'm going to go ahead and add the study, Elliott wave turning points. And there's different types of Elliott wave turning points that we have in the marketplace. And these different types just are trade lengths. They're all based on trade lengths, how long the trades are. So we have short-term trades, medium term, which are the blue. We have an ultra short, which is the magenta. And then we have a long term, which is that autumn orange. Orange. And then we have what's called dynamic, which is kind of this whitish tannish color. We call it dynamic tan. A dynamic is a very short trade. You know, just depending on the time frame, it's only up to about 5 different bars. So it's a very, very short trade. And so if I put this on the chart, you can see that there's a couple of different things that are happening. So you can see all of the different colors. Right? Here's a short-term setup. Here's a longer-term setup. Here's the current setup, right? Which is this orange, and this is a short because it's above the market. And essentially what it does is that once it puts this in place, once that bar is set in stone, that Elliott wave turning point is not going to change. Okay? And it puts on the current one, the default settings, on the current one, it will put in some lines for you. The first line is this one right here. It's a dotted line. And this line represents, I know a lot of people want to call this the stop, but it's actually just the cancel trade. If for this short, for this sell setup, if the market were to trade and break above that before it gets triggered, then the trade is over and you can just move on from it. Okay, that's a failed signal. That happens in the marketplace. But if what you see here happens is that it came down and moved into this area. This is what we call the trigger area. All right. If the market moves into this trigger area, we can then be safe to say that the market proved to us that that pivot is in place and it's moving in the direction we expect to. That's where you can initiate the trade. Then as it moves down, the expectation is it's going to move into the third area. Okay. And the third area is this area right here. Okay. This is basically where you would consider getting out of a trade. It's the target. It's where we believe the target should be for this particular trade. And then, of course, once the market moves into that, you've got a few decisions you can make. One is you can completely get out of the trade. 2, you can get out of some of the trade. Or 3 is that what we've done is that as soon as we moved into that area, as you can see right here, we start putting these little dots on, these little colored dots. And basically what they are is a trailing stop. Now, it's not in a sense that you would use those numbers in your brokerage account and put that trailing stop in. But what it does is it's an analytical stop that if we move into this target area, but we stay in this selling opportunity below those dots, you can continue to stay short in this trade. Okay, so it's kind of a technical trailing stop. Okay, so that's essentially what the Elliott wave turning point looks like. Now here's another example of a trade, ADM. Here's a buying opportunity. Okay, I'm going to completely, for right now, ignore all of these trade setups. But here's the current buying opportunity. All right, and as you can see, this is our cancel trade, meaning that as soon as it gets into this area or doesn't get to this area but comes down to here, this is where we cancel the trade. This is where the technical analysis of this has now failed. And again, it does happen. That's why we put it there. But as soon as this market moves up and trades and closes into this area here, that is our trigger area. The expectation is that this is the area we're looking for this particular market to move. Okay, that's our target area. Now, if it does get up into this target area, then what ends up happening is then you'll start getting the dots. And so you can either get out of the trade completely or, again, keep in the trade, stay in the trade until it violates the dots, and then therefore, you're out of the trade and you've made a good profit and you can move on from that. So that's essentially how we use the Elliott wave turning points. Now, you can click on each one of these to see how they actually reacted. I'm just left clicking on the ones in the past. The current one will always be open and you'll be able to see the target and the trigger points. But any of the ones in the past, you can then take a look at and see how they actually worked out on the screen. Now, another thing we use with the Elliott wave turning points, let me delete some of these lines here. what we use to help qualify these trades is a tool called the Tom Strength Levels. And what the Tom Strength Level tool does, I'm going to add this study down here, Tom Strength Levels, TSL. And what it does is it adds some levels onto this study that gives us an indication of longer term and current term momentum in the marketplace, in this particular market. Okay, it lets us know how strong this particular trade is. And so what we do is that we say is for a buying opportunity, okay, we have 3 sections on this Tom Strength Levels. This top section here, right, that's for the strength, the buying strength. Then we have a bottom section, which is for the selling strength or the weakness. And then in the middle, we have this area here. Okay, this kind of brownish, grayish area here, I don't know what it is on your screen, is what we call the neutral area. There's no definable direction of strength. And so the rule of thumb is that as long as you're in this buying opportunity, as long as you're in this upper band area, then you have positive strength in that direction, longer term momentum moving in that direction, and that helps qualify that particular trading opportunity. Now, we do give you, if you notice here, this little blue box, we do give you a little bit of gray area that if it dips into this neutral area, it still does have enough strength. It might be a red flag for you as far as position size or how you would manage your stops, but for the most part, it's still a qualified trade if we're still in that little bluish area. Okay, we just allow for a little bit into the neutral area. But if that is not there, then that is not a qualified trade, and then you wouldn't take that. Now, a nice thing about this is that, and I'm going to change the properties of this study and turn on the actual lines. I'm not sure if you want to do this all the time because it puts a lot of lines on the chart, but it also indicates how strong at that particular time the market is. And what we say is that one of the rules is if you're looking at the Tom Strength Levels for any symbol, and you see that you're in this yellow area, right? That's the strongest or the weakest area. If you have this yellow area, usually what happens or what you're looking for after that area is a return to that neutral point. Okay, at some point you'll see a return or at least a slight return. So the expectation is right here at this level, we're going to see some strength pulling into the marketplace. And so not only can you use this as a qualifier for Elliott wave turning points, you can actually initiate trades just off of this tool alone by saying that once we get into this strength, or in this example, this weakness, we can then see a return back to that neutral area and then take a trade in that particular direction. So whether that's on the top side or the bottom side, and we can scan for this too, by the way. I can come into the matrix. Okay, and I'll just go ahead here and say all stock symbols. And then we're going to go ahead and go into additional filters, DT Elliott wave turning points. Now I can search for turning points, but what I want to do is just search for Tom Strength Levels where the TSL is above a certain zone. So it's either above 4 or below 4. All right, and so I'll click on that and we'll see if we can find anything. So we've got a bunch of stocks here. What I'll do is I'm going to actually open up a chart at the same time. I'm going to put the Tom Strength Levels on that chart. All right, I'll put the level 4 line on for you. Then I'm going to tile these windows vertically, and then I'm going to group them. We'll group them to the purple group. That's just symbol grouping them if you haven't seen this before. So when I click on the matrix, you can see that here we go. We're in a yellow mode for this particular stock. And I can click through each one of them and they're going to have that yellow. So in this case, there is a potential that this is moving, the weakness is moving back down. Okay, and we can see that there's some consolidation that's happening here. There's a potential trade in this particular market that you might see a return to that 0 line, which could potentially give you a trade moving down. And if you combo this with the Elliott wave turning points, I'll just throw this on, At any point in time, if you see an Elliott wave turning point pop up here for a sell opportunity, there's our expectation, is that we're going to have that return to that neutral area with a pivot low. That gives us an indication that we could potentially take that trade. So it's not really a continuation trade. This one is really looking for a change in direction trade using the Elliott wave turning points. And we easily searched for a bunch of them just by adding the Tom strength levels filter with all stock symbols. And if you wanted to, you could come in here and turn on the Elliott wave turning points also and say within the last 3 bars, show me all the medium term trends that have a Tom strength level above 4. And then of course you can scan for that. Now remember, the more filters you put in, the more you won't find results. So you can scroll through each one of these to see if you find any potential opportunity for this type of setup. And right now it doesn't look like we have anything. Let's see if there's anything on the dynamic. So that's what we're looking for, is a pivot move in that wave 4, or in that level 4 of our Tom strength levels. So that's just one of the ways you can use that particular one. So the question that I'm getting now here is in Tom strength levels, there's a next higher time frame setting. What would be doubling if you run this in a daily chart? So on a daily chart, and that's actually a really good question, on a daily chart, and what we have inside the setting here, I'll turn the properties on, there's a next higher time frame, all right? And so we're going to use an estimate, and it's going to put a green line on here. And all essentially that this does is it takes the Tom strength level at the next higher time frame and displays that on this particular time frame. And the next higher time frame on a daily chart, just to let you know, is a 2-day chart. All right, we use the 2-day chart for that. And there's no 2-day chart for the drop down. We probably should add that. But to remember, when we put a different time frame on a chart, we just type the number in, right? If you want a 6-minute chart, you just put a number 6 here and click load, and it would do that. But if you want a 2-day chart, you would hit the number 2, which would put it at 2, and then D for day, and you click load, and then you'd have a 2-day chart here. Okay, so you can see the Tom strength level for this 2-day chart is up in this area. If I drop it back down to a daily, you can see that's where it's putting it. So that's how that particular tool works. This just takes a longer term, higher time frame momentum and then moves that into play for you. Okay, so that's essentially the options volume map tool and the Elliott wave turning points tool. Now what I want to do is just spend the rest of the time here going over the risk graph and the projection tool and all of the features inside of it. And this is, again, going to be more of a how-to. How do we set up spreads? How do we adjust volatility and things of that nature? There's a lot of features inside of our risk graph that a lot of people don't know about. So I want to make sure that you're aware of all of those different features. So let's just go ahead and open up a risk graph. And essentially a risk graph, if you just look at it, it looks like a standard risk graph. You have the center line of this risk graph, which is this white line. I hate putting the crosshairs on. Let me go ahead and... Nope, I don't have a laser pointer on this GoToWebinar. But this down here where my cursor is the actual this area here at 41.20 is the current price, and this will move in real time when the market's moving. Okay, then you have the solid blue line here. The solid blue line is your profit and loss at expiration. Okay, this is at expiration. This is if we closed at 41.20 at expiration, this is how much money you would lose. The red obviously is your loss. The green is actually your gain. So here we have the 0 line for that. So as the market moves down for this particular trade, this is beat, which is basically a long, if you see up here, this is our area where the spread has been built. It's just doing a default long call, June 15th long call at 41. If it were to close at 41.20, you would probably not be happy. You were making some loss. But if it trades up here anywhere above 43.32, then you're going to start seeing profits on this particular trade, right? Profits above what you paid for. The purple lines that you see here on either side is one standard deviation out from that particular center price. So as the price moves up and down, the standard deviations will move. And we actually support up to 3 different standard deviations if we adjust the scale. Okay, so we have 1 standard deviation, a gray area with 2 standard deviations, and then 3 standard deviations. And this is really important, especially if you're doing spreads like condors or neutral-based spreads, where you're trying to set the spread up where you're within 1 standard deviation on the wings of the spread, right? You don't want something to trade outside of those bounds. And so now you know on this particular risk graph where those standard deviations are. So again, up in the upper left-hand corner, other than typing in your symbol, we have the ability to build a spread. Now, just like all of our other tools we have in the software, you can hit this drop down and choose one of the 32 different spreads that we support. And those will automatically build you that spread at the money current front month. Okay, so if you want to do, let's say, for instance, a bull put spread. Okay, not a very good bull put spread, but here's a bull put spread nonetheless. Now, that's assuming, like I said, front month at the money. If you want to change this spread, you can always click the edit spread, and then obviously change it, the expiration months, change the strikes. I'm going to actually switch this over to Apple because this doesn't have a whole lot of options in it. Okay, here's a bull put spread for Apple, and as you can see, lots of different expirations, adjust all the strikes, puts. You can actually put in your fill price. If you're broker enabled and you actually send it from your account window, it'll fill that price in for you. If you're not broker enabled, you can actually type in your fill price, that when you actually purchase it at, and it'll run the calculations off of that. If not, it just defaults to the mid price. All right. So there, and so let's do this. Let's change the expiration. Instead of June 15th, let's go out to July 20th. Okay, so we have a July 20th, still not any better. But again, you can make adjustments to find the spread you want. Now, there are tools in the software that will find these spreads for you. We have a spread select tool, which will allow you to make adjustments and find a spread and send it right to the risk graph. But you can also edit the spread here. Now, at the bottom, this is our modeling center. Okay, this is where we can put in different types of models. Right now, this is based on current volatility. This is based on current days to expiration, which is 0, right? The blue line is at expiration. All right, this is your profit and loss. You can see here with Apple, right now we're profitable on this. If we were to expire today, you would see here we were profitable at the max range on this bull put spread. But we can model things here at the bottom, and we can have up to 3 different models. And to turn one on, we just click the checkbox. And what that does is it lets us know that this particular dotted line is calculating based on expiring on today, which is 5/8, with a volatility, a net spread volatility of 1554. Now, we can adjust this days to expiration, so we can say, okay, 10 days before expiration, here's 10 days expiration, and what if the volatility just goes crazy and goes really high, goes up to 51%? Now we're actually losing money on this particular trade. As you can see, this is the area here where it would be if we at 10 days to expiration with an increase to 51% volatility. All right, so you can model up to 3 different types of volatility and days to expiration setups to determine your potential profit and loss. So it's a very powerful tool. What makes this tool a little bit more powerful is the ability to compare spreads, right? if normally you would have to open up another risk graph and type in all the stuff and get it, look at them side by side and just determine which one you like. But what if you wanted to say, I want to compare this bull put spread to, I don't know, just buying a long call? How would I do that? Well, I'm going to turn the modeling off and I'm going to click on this compare spread. All right, so now what it does is it opens up a whole nother box down here and it allows me to add a secondary spread. Now I can copy the first spread if I want and make adjustments to it. So say you're correcting a position, you're adding a leg to see how that affects the overall position. You can do that right from here just by clicking copy primary spread, or we can add the new spread. So in this example here, I'm going to add a long call. And so what it's done is it's actually added the long call to that particular primary spread, which is the bull put spread. Bull put spread is the blue line at expiration. The long call is the the magenta line is the long call. So I'll scroll in here a little bit more. So you can see with the bull put spread, I'm taking a heck of a lot less risk overall for this particular trade, right? If I initiated this trade, the bull put, my risk is maxed out here at negative 306.12 roughly, whereas the long call, because I had to pay a lot of money out of pocket for this, my maximum risk is what I paid for it, which is the 512.50. But the bull put becomes very profitable here extremely early. So at 185.02 for Apple, I'm making max profit on my bull put spread, all the way up until right about here, which is 192.21-ish. At that point, the bull put spread is at its max. There's no point at that point in staying with it. That's where the long call jumps in and becomes much more profitable. So if I'm taking a look at this and I have a target level of, say, 195 for Apple, right? And I'm determining whether I want to take a bull put spread or I want to go into just the long call itself, I can say that, you know what, I'm probably much better off with this long call. But I need to know my total output, my total risk, and obviously my total risk is a little bit longer or a little bit more for that long call. So again, how do you balance that? That's completely up to you, but this allows you to compare those two different spreads. And so you can add as many of these comparisons on here as you want. We can do a bull call spread. So the blue line again is the color here, which is the primary spread. The green line is that bear call spread. So you can see that the bear call spread again has less risk and has a little bit more potential for reward here. The stock's got to move up a little higher to move into that mode, but if that's what you think, you have less risk, a little bit more profit. You're comparing these two spreads, you're making a decision based on this information. And so you can click between these to determine what you want to do just by using the compare spreads. And so what a lot of people do with the compare spreads is especially, to repair a specific position, okay? So you can see the outcome by adding a leg. And again, you can, just like the main spread, you can edit these spreads also and make adjustments to them, whether they be expirations, fill price, whatever you would like to do at that point. So that's essentially the risk graph and how we can model out single spreads at expiration or compare a couple of different spreads at expiration. The question is, though, what if you wanted to model out this particular spread every single day between now and expiration? You want to model out the price and the volatility. How would you do that? Okay, because we know that Apple is not going to trade on a flat line all the way to the end of expiration. It's going to have lots of peaks and valleys. And so what if we want to model some things out to determine, hey, I could lose some money here if we have a pullback. And if it does have a pullback, how far can this pull back before I start getting into trouble? Well, we have a tool designed called the projection window, the options projection window. And I'm just going to be lazy about this, and I'm just going to right click and send this spread over to the projection window. All right, here's that exact same spread on the projection window. Okay, that's that Apple bull put spread. Now there's three basic sections here. These look like studies on a chart, and they kind of essentially are. And so the top section here is the actual profit and loss. The middle section is the actual daily pricing. And the bottom section is the volatility. Now there's a gray area here off to the left, and this is all historical. So the historical value, profit and loss, historical underlying pricing, and the historical volatility, not historical volatility, historical implied volatility. All right. Anything to the right of this is between now and the expiration for that particular spread. And so as you can see here is if Apple closes at today's close of 185.96 all the way through till expiration, here's our profit and loss. And as you can see here, we have a profit of looks like 195 even. But as we know, we had an expectation that Apple, or I'm sorry, the $195. But we had an expectation that Apple was going to go to 195. Not the value, the actual price. All right, so what if this particular line was at 195 at expiration? I can drag this line up to 195, or I can just double click on it and just type in the number. Depending on the stock, it might be easier. So at 195, as you can see here, we're going to be making that, again, max profit at 195. But if this thing goes down to a certain level, we're going to start losing money. And the beauty about this tool is that you can make these adjustments, these up and down movements at any point in time between now and expiration. And we even put on this yellow line, okay? And the yellow line represents anything above this particular spread is profitable, anything below it is in a loss mode. So as you're doing your modeling, you can say, I just need to be above this yellow line to continue to stay profitable. And then, of course, the bottom section here is the volatility. So as you increase and decrease volatility, how does that overall adjust the value? So if the prices start to spike and the volume or the volatility, implied volatility starts to spike, how does that actually affect it on any given day all the way up? Let me show you an interesting thing here. I'm just going to change this from a bull put, and we're just going to go a long call. Okay, so knowing what we know, if Apple closes at its current price of 186.05, it's actually 186, at the end of our expiration, we're going to lose $407. This is proof positive that theta decay is not your friend, right? This is it. This is theta decay at its finest visually, letting you know that if the prices stay the same, that theta decay is going to come in and chew away at your loss. But if we can get above this yellow line, we can become profitable. And of course, if we thought we can get above 195, then of course we can be a lot more profitable. So as long as we stay above this yellow line, then we'll be profitable in this particular trade. Now, if anyone wants to know, no one's asked, but I thought I'd throw it in here. This purple area that you see here is a probability cone. So it's just a probability cone. It's a one standard probability based on past prices to let us know that, we probably will, given normal circumstances, trade within this particular cone. So you can make those adjustments without doing the adjustment way outside of its normal trading range. But you can clearly see where you need to be anytime between now and expiration. And of course, you can adjust the volatility with this too, which will then adjust that particular value. So that's essentially what we can use the risk graph for in determining or the projection tool, how to do that for every single day throughout expiration, whereas risk graph is more geared towards a single day or at expiration itself, where you're going to be. So this is a really, really powerful tool for you to use. Another thing too, just to show you here, is if, let's say for instance, you're using a neutral strategy like a long iron condor. All right. The long iron condor is a neutral strategy. It means we need to be in a specific range and not outside the normal trading bounds. So what we do on this is we actually put two yellow lines in here. So you can clearly see that if I'm in between these lines, I'm profitable, but if it goes outside either up or down, I will start losing money, okay? Let me reset these lines. So as long as I stay in the middle, anytime I go outside of that, I'll lose money. And another thing too is that when I adjust the volatility for this spread, as you can see, the historical volatility, the historical implied volatility, there are 4 legs, and each one of these legs is color-coded, so with the line that you see down here. And so as I'm moving this, it's actually moving all of the lines. But I can actually right-click in here and say edit the legs separately. It of course will give you a thing saying, reset your projection lines. Okay, and now I can individually move these lines so I can adjust the volatility for each one of them. So as you can see here, and of course anytime you move a line, it will go ahead and recalculate that profit and loss for you. So that's essentially the projection tool in a nutshell and how we can use it. Again, the most important part here is the yellow line here. That gives us that range of where we're going to be profitable. These lines can be moved up and down manually, or at any point on any day, you can double click and type in a specific price. So if we want to go to 165, then it will automatically jump that way for you. So you don't have to be so precise in your mouse. My mouse is terrible here, so it's hard to get a precise number. Well, that's what I pretty much had for today. We talked a little bit about the risk graph. We talked about the projection tool. We talked about Elliott wave turning points. We also talked about the options volume map. So these are all very important tools. There are, of course, many other tools inside of the program. Our scanner tool is an incredibly powerful tool as far as finding opportunities, whether it be breakout trades, momentum-based trades, if you're a gapper trader, candlestick trader, if you want to look for specific candlestick patterns, you can do that. We have technical scans if you want to look for covered call candidates. So you want to trade covered calls, but you don't know where to find one. How do you find a stock that has low historical volatility but high implied volatility? Well, we do that for you here. We'll give you a list of stocks that meet that criteria so you can determine which ones you want. Top option scans, so if you're looking for options volume breakouts, things that have a high historical volatility, low historical volatility, comparisons between the two. We also have advanced scans. We have a list of overpriced options that symbols that have stock symbols that have options that are considered to be a lower price. Their continuous implied volatility or their average implied volatility is in the lower part of the scale. Or overpriced. Say you're a credit spread trader and you want to find lots of options that are overpriced. You can do that with the matrix scanner. Or if you want to look for volatility skews, we also have a search section where you can find volatility skews right from the actual scanner itself. Scanner has lots of different filters, which allows you to filter for strength. You can scan for specific options. So if you just want to look for specific options here, you can come in here and say, show me options that trade between a certain price, volume, open interest, that expire in X amount of days, or that have a probability of being in the money at a certain percentage, or have an actual volatility. Whether on the low side or the high side, and you can combine all of these mins and maxes and come up with a list of options that meet that criteria. We also have, like I said at the beginning of today's presentation, a custom scan list. You can scan for Elliott wave turning points if you want to look for a specific point. Maybe you want to look for a long-term trade, short-term trade, and you want to combine that with Tom's strength levels. And then, of course, we have our earnings, where you can look for earnings for people that like to trade earnings. If you want to look for earnings on a specific day, you can do that. You can do it, say, earnings for the next 3 days or 5 days. So you want to set things up and look for those particular setups. You can do that. So it's a very powerful scanning tool, and we're always adding more and more scans to this tool. Of course, our advanced option chains, being able to not only look at all of the different expirations by adding them with a custom whether you want strikes, all strikes, 3 strikes, above and below certain things. We have a historical view in our option chain that allows you to go back in time, back to 2011 for most stocks, to see a end of day history view of what that option or those options did for that particular underlying symbol. So you can see a historical view of that. We can also, if you're broker enabled, I can't even explain this to you other than anywhere in the program you can right click either on a spread, a stock symbol, a symbol inside of the matrix, and trade directly from that. So if you build a specific spread, let's say for instance we want to build a straddle for Apple, an at the money straddle for Apple. So we'll go ahead and do that real quick here. I'm just going to click once on my ask on the call side, once on my ask on the put side. There's a simple straddle that I just built up here. I can right click and say populate a trade ticket. It automatically populates it, and if I just want to go to market or I want to put in a limit order, I just click trade and I'm off and running. It's that simple and that easy just to build a quick spread and jump right into the trade, make a quick adjustments and move on to the management side of it. We have a spread select where you can build your own spreads. We talked about this a little earlier. How do I build a specific type of spreads with a specific type of criteria? Starting strikes, number of strikes, directions, those types of things. It'll build any type of spread that you want for you based on that. We have a strategy builder where you can say, well, if Apple gets to 195, remember, I don't know why I'm stuck at 195. I just made that number up. And I think it's going to get to 195 by the end of the month. Show me a list of spreads that I could potentially trade. I should have started here with this. That's a really nice looking spread there. So here's our strategy builder. Okay, this is a bull call spread. Right? You can see all the information very quickly. You can also see profit and loss at target and adjust it. So even though this one looks a little bit different than the first one might visually look a little better. The second one has a high, the profit and loss at target is a little bit higher on this particular one. You got to output a little more money on it, but it's got a little higher profit. As you can see, your return on your investment is a tinge bit lower on there. But you can see these numbers clearly. Choose different spreads and look at each one. Here's a long call at this point. And then again, for instance, if I'm choosing between these two, return on investment or overall profit, right? If I like this one, I can just right click on it, populate a trade ticket, click the trade button, and I'm off and running trading. So it's that easy and that simple. The concept here is we're traders here at Dynamic Trend. We've been traders, going back since we started this software. I've personally been trading for over 20 years. And we designed the software to make it as easy as possible, because the worst thing in the world is doing analysis like we used to do back in the 90s, right? You do the analysis on one program, and then you go on to another program, log into it, and then you got to figure out how to put the trade in. And by that time, the trade's already gone or something's happened, and then you got to go back to the analysis. You're back. This way, I'm making my decision, and the trade part of this is non-existent. All right? I don't have to think about it. It's like, this is the one I'm ready to go with. I want to go at market. I'm clicking the trade. I'm in at market. Now, of course, I'm not now because obviously the market's closed. That would be really impressive if I could put that trade in after the market's closed. We have some other tools in here too. If you're a skew trader, we have skew charts. We have group strength. So if you want to look at groups and sectors to determine where the strength is pouring in and out of sectors and groups, we have the tool for that. Sorry if I'm running through here real quick. I'm running out of time. We have an option decay. So for you credit spread traders or covered call traders, if you want to understand where your trade is as far as theta decay goes, you can put in that particular strike and expiration, and it will let you know where the theta decay drop off is going to be maximized for you. It's a really nice tool for that. We have for our broker enabled customers, we have an account window. The account window will let you know all of your currently active positions, all of the orders that you have, and then of course all of the messages, your account overview. This is a simulation of count, of course. So you can manage your trades right from here. Remember when I talked about being able to go into the account window and send one of your actual trades to to a risk graph, I can just click this check boxes here. I'm going to group these two options trade and right click on it, and I can send it to any feature, including the risk graph. And then boom, I put it here, and here is that options position that I have. Right, as you can see, looks pretty good at this point in time, these two particular positions. This is where I'm at for expiration, that I'm targeting for expiration, but it's that quickly, and it automatically puts in the fill price, so you can see where I was filled at and does the calculation for you. And again, that was that easy. I grouped up two particular symbols that have obviously unique stock names. I can't do two different ones. And just right-clicked and said, give me the risk graph for it. Let's give me the option projection tool for that. And there you go. And so I can start making adjustments to this. If it goes up and down, where could my profit and loss be at any given time for this particular trade? So very powerful tools. And of course, we have the trade ticket. That's if you're broker enabled, you'll have a trade ticket so that you can do equity options, multi-leg combos, futures, Forex, whatever that you trade or your brokerage account is enabled for. All right, so let me go ahead and answer some questions. And if you want some more information, I know today's presentation is kind of limited to just a few different features in the program, but if you want to learn more about the Dynamic Trend software, I definitely recommend coming to our website. Under our website, we have this features button. Now you can go to the individual features if you want, but if you just click the features button here, what it's going to do is it's going to load a screen here that has videos for almost all of the features that we have and a little overview. So when you find something, if you watch the video and you decide you want to look a little bit more into it, you can then, of course, click the More Info button and it'll jump to that page. You could always come here to the Support and Webinars tab, and that will obviously, you can sign up for next week's webinar or so on and so forth. But underneath here, like I said before, we have the archive videos. And like I said, tomorrow, this video will be up here on the archive so that you can view that at a later time. But definitely come in here to our website. And of course, if you're not a customer yet and you want to subscribe, obviously under the subscribe button, or if you have a specific link that was given to you by, if your broker sent you a link, that will take you to the subscription page for that, that particular product or that particular data feed itself. So definitely recommend checking that out. Also, whether you're a customer or not, send an email to support@dynamictrend.com or sales@dynamictrend.com if you have any kind of questions. We're always here to answer. We're always happy to answer. And absolutely would love to hear from you at any time. So let's go ahead and close today's session out with answering some of the questions that have come in here. Can one print or copy any of the screens for future reference? How would that be done? I guess there's a couple of different ways that you could do this. There isn't a specific print function that we have, and it's something that we probably will be adding, I would assume, soon. But the best way to do this is whether you're on a specific screen or all of the screens, you can always hit Alt Print Screen, hold down the Alt key and hit Print Screen on your keyboard, and that will take a snapshot of the window that you're on. It won't take a snapshot of your whole screen. It's just whatever the active window that you're on. And it'll take a snapshot of that. And then you can just go into Microsoft Paint and do Control-V, and that'll paste that right into Microsoft Paint. And then you can make edits to it if you want, put some notations if you want, whatever you want to do, and then print it directly from there. So apparently that was the only question that I had. That's fantastic. Hopefully you guys got a lot out of today's session. Next week, I'm going to be taking a lot of email suggestions from you. Remember, send me suggestions, support@dynamictrend.com. When you send me those suggestions, I will start building some stuff around that. I know I did get one question here from James about... So James, I'll answer that for you. But again, at any point, if you guys want specific education, I know we've had requests for looking at implied volatility and historical volatility and continuous implied volatility and how that affects actual trades. And just to kind of talk a little bit about that and how we can apply that in the software, we'll be definitely creating some education for that for you. So if there's anything else you specifically want, we'll definitely add that. And again, I'll always give you some option volume maps and some Elliott wave turning point setups at the beginning of each class, just to let you know what's kind of going on. Definitely take a look at some of those things. Remember, I think we looked at LMT. That was our breakout trade, and we can continue to follow that to see what's happening with those options. And then ADM, remember that was the Elliott wave turning point trade, so we can keep an eye on that one and see how that works out. And again, what we want to do is make sure that not only we look for the Elliott wave turning point, but the Tom strength levels. Right? We want to make sure that this thing can close inside of this box, our trigger area, and we also continue to have strength inside the Tom strength levels, meaning that we're above that. I'll make this bigger for you, sorry. It's bigger on my screen. So as long as we can close in this box or continue to move to that box, and we continue to stay in this blue area here, this neutral area, it's not actually the neutral area, it's the qualified neutral area. If it moves down and we lose this blue box, then that trade doesn't have as much strength as we'd like it to have. It still can be taken, but maybe with a little extra caution. So, other than that, I'm going to go ahead and wrap up today's session. Thanks again for stopping by. Please contact us when you can, if you can, through support or sales@dynamictrend.com. Other than that, I will see you next week at 4 p.m. Eastern Standard Time. Feel free to register for that webinar, and we'll see you then. So I hope you guys all have a wonderful trading week, and we will see you next Tuesday. Thanks again.